All right, guys, here we go. But right quickly, I want to show you a couple of tricks and tips that we use. We teach our Patreon members to use to pull money out of these markets like an ATM machine. And the first example here is Apple, and this is the 2 minute chart. Every candle's, I mean, 4 minute chart. Every candle's 4 minutes of price action. And the third hit of these trend lines, whether it is an uptrend line or a downtrend line, uptrend line with price hitting it on the way up, or a downtrend line and price hitting it on the way down, high odds, high probability when it hits on the third touch, it gets rejected and pushes to the downside. And that's where we went in. Took a short position here, and this is pretty much where we're sitting. Now the next one here is Amazon. We'll go to the daily chart. I'll show you a couple of tricks here. Number one, well, first of all, we teach our Patreon members to have two or more factors, reasons, identifications before you go into a position, whether to the long side, anticipating more move to the upside, or go short, anticipating a move to the downside. And as you can see here on Amazon, on the daily chart, where the blue arrow is, we were coming, well, first of all, we had moved 38%, from the lows here, which is, a pretty good move, for this big of a stock. Number two, we were hitting a substantial potential resistance zone here at the red dash line, okay? All this sideways consolidation, all that support. And then once you break it, retest and go back under, it is then, higher odds, higher probability is going to be resistance as you come into it. Okay, and then also we have the 200 simple day moving average, that purple line here coming down. Okay, and then on top of that, we have the point 618 fib where the small thin red line is. Okay, so several factors there. So we had, the odds percentages on our side. And then number two, we always back that up with an insurance policy being the our stop loss, okay? And we teach, people how to do that and how to get schooled up and protect their investments once they're in there. Now let's go to the DXY. That's why you're here. And as we can see, we had a nice push off a weekly chart indicator here, that white line and the blue dash line under it. And let's let you see that. We were talking about factors and percentages and, location. So going back to December of 2016, we had a high pivot here, previous resistance, and then we came down, had a lower high here, previous resistance in March of 2020, and we just drew our trend line right through it. Now in this situation, the odds probability didn't really work out as far as a rejection on the third hit. So here's the first rejected, second rejected. Normally you get that third hit rejected, but we blew up, came back into the scene of the crime, retested that area, see, right here, and then continued on, okay? And then most recently, well, actually this week, we've come down, hit that line, came into it over here, support, came in here, so far, so support, and then on the daily, as you see, we're now, pushing up to the high side, okay? And we believe a near-term target and another potential resistance area is going to be between that 103 and basically, 103 and 103.40, where our, actually technically that's 170. Okay, 103.40 to 70 there is going to be our possible resistance zone for the dollars. We come up here into this area, into the 50, possibly pulling back in this previous uh, rejection zone or resistance zone where we couldn't get up through there until today. Now, I'm calling this a little early. We still have 6 hours to go, so the dollar could come back down under that red dash line of previous resistance. See how we couldn't get up there even back here the other day. but we're barely up there now. Okay, so possibly we'll close there. We still have 6 hours to go, like I said, so anything could happen. I believe we'll come up, hit that 50, pull back into previous resistance. That will be now potential support, and then take off. So it's a 1, 2, 3 move. Now, why is that important? Well, as the dollar pushes up, guess what? All of your commodities, for the most part, not all, like right here is oil. It's pulling back. We took we scaled out because we were kind of, thinking we might, uh, this green candle might be a reversal, but it came back in, confirmed we were going lower. So that's why we got back in on the short position. And then we showed you that on another video. Gold, it's now from the previous video. Wow, we're now under this major support line here. So yeah, the not looking good for gold. So our target right down here is probably uh, pretty spot on. And then silver, we lost this sideways consolidation. A little trick, a little hint about that, this sideways consolidation zone. They will 100, 1000% of the time, they will break out. This was a head fake the other day that we caught, and we knew what was going on, and that's why we went in short way up here when most people were going long, anticipating a breakout uh, on silver. But anyway, here we are, and expecting it to come down into the low $21 area, maybe even hitting 21 bucks. Okay. And also, we have the copper here under the 20 now, and looking for lower lows there. And then also Bitcoin, we think, whoa, that's not good. We think Bitcoin is going to, trade a little bit lower here in near term as well. But okay, guys, thanks for watching. Check out give us a follow on Twitter. Check us out on Patreon, and we will see you on the charts.